Welcome, everybody, to the Tuesday edition of the Not Your Average Investor Show. We are fresh off the third annual Not Your Average Investor Summit. Throat's still a little raw. I don't know if you can tell in that intro.
Oh, my.
But we're coming fresh with a new Not Your Average Insights. We got a couple of questions around some smart investors asking some nuanced questions around this idea that if we expect home prices to go up, we expect demand to start happening, going higher again, demand to increase for purchasing homes. Doesn't that mean that there's going to be less rental demand? Fair question. So we did a little bit of research. We're going to answer that. Amongst other things today, I am your host, Pablo Gonzalez. With me, as always, a man that I affectionately like to call GC because of his genius concepts, because he knows how to generate cash flow, because he's a great host, and because his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody. Great to be with you.
It is great to be back in the studio. It is great to have spent all that time with our community. And it is also great to bring you the first announcement on the show of something very special, GC. What are we talking about?
Well, we have been working really hard for the last year in anticipation of JWB's 6th home donation through JWB Cares. We are committed to being a part of the solution when it comes to the affordability crisis and home price affordability. And the best way that we know in order to help be a part of that solution is to bring our entire community together, raise a whole bunch of money, work really hard, build a brand new construction home, and give that home to a very deserving member of our community here. And we are so excited that this year we are closing the loop, and the very special family who's going to receive that home also happens to be a JWB resident who really needs a helping hand. So that is coming up. It is going to be happening May, June time is when we're actually going to deliver the home. But one thing we do every single year is we have the JWB annual charity golf tournament, which is the main way that we raise funds to be able to do this good with all of you. So that's coming up in April. But before that, what we get to kick off today is one of the fundraisers that we get to do just internally. My team is always coming up with ways to raise money. One of the things that we do is a raffle. You were a part of the raffle last year.
I like to gamble.
You do like to gamble. A lot of you were a part of the raffle last year, and I'm coming to you asking for your help to be a part of the raffle again. So it's a 50-50 raffle, and we're starting to sell raffle tickets right now. In fact, I just learned that at the summit, when we announced at the summit, we raised $960.
Let's go.
In raffle ticket sales.
Let's go.
That, of course, half of that will be going to the home donation, and then half of that is going to go to the very lucky person who wins the raffle. But here's what we're going to be doing this year and right now, and it's open, so I would just love for all of you to join the raffle and make this donation and put yourself in the runnings, be a little bit of a gambler because you might walk away with a nice check as well.
I know you weren't there for karaoke, Gregg. I kicked it off with the gambler because it is representative of it. And sometimes you got to know when to hold them. Sometimes you fold them. Sometimes you invest in vertically integrated JWB rental home properties.
Is that what Kenny Rogers said?
And sometimes you got to know when to buy a raffle ticket too, because it's a 50-50 chance that you win some money here.
Sounds like a remix hit right there.
It's a remix hit. We're going to show the graphic one more time here. If you are looking on your laptop computer or your desktop, you can just scan that right there. If not, Cody put the link in the chat. If you want to win, go to jwbrealestate.com/raffle and donate to a good cause. And it's not just your team that's doing creative things to raise money for this. Am I right, GC?
It is not just my team.
Well, I mean, it is your team, but a different part of a different team.
It is a younger member of the team, I think is where you're going there.
Yeah.
So we wanted to encourage all of you to help donate right now. And I thought one of the best things I could do to help you encourage you to donate right now is to tell you this amazing story from the summit. And it has to do with my daughter, Isabella. She's 11. And before the summit happened, just a few days before, I was sharing all of my fears about the summit with her. Oh, are people really going to show up? Or are people going to have a good time? I knew I'd be speaking a lot and, am I going to screw up? And I'm sharing all these fears with my daughter because I think it's important for her to know that everybody has fears and we all, work hard to overcome those fears. Well, when I told her that I was going to be speaking and I was concerned about it, she said, "Wait, Dad, you get to speak?" And I said, "Well, yes." And she said, "Well, can I speak?" And my daughter has never spoken at one of our events before, had never been to one of our events before. But I said, Okay, Bells. Well, yeah, what would you like to speak about? And she told me this story straight from the heart that blew me away. And when I came to my team and I said, hey guys, my daughter would like to speak at the event, we quickly made space for her. So all of you who are at the event know this story. You were there, but what Bella shared was, you know, how every great investment or every great business starts with a big problem you're trying to solve. And for her, the cause that she's really passionate about has been dogs. And
Yep.
she just can't understand how dogs are mistreated. And, you know, they're supposed to be our best friends. And sometimes, you know, they just get so mistreated. And she just doesn't understand it. And so what she did about it is she started her own company and she makes bracelets just like this. Let's see, we'll zoom in here.
Yeah, zoom in here, DBA bracelets.
That's right. So she makes bracelets and she started this company 4 years ago. And her friends sell bracelets at the end of my driveway. And through those sales, they've been able to save 4 dogs because you know what? They donate half of their profits to the Humane Society. And so they've been able to save these 4 dogs. And she, for the Not Your Average Investor Summit, wanted to support the JWB Cares mission. So she has been making these bracelets here. Do you know what they say on there, Pablo? What do these initials say?
DBA.
DBA for Don't Be Average. And she asked folks if they would like to buy a bracelet for $10 to support JWB Cares. Of course, all of the money is going to JWB Cares, not 50% of it. All of the money is going to JWB Cares. Do you know what that little girl raised as far as dollars to support JWB Cares?
I mean, I have to assume it was an extraordinary amount.
Over $400. In
Let's
fact,
go.
$434 before this morning, but when I shared the story with my team, it's probably up to 500 now. Truly making a difference. And so I thought a great way to package this whole thing together is if you all would open up your hearts and your wallets to be a part of the raffle today. There's different ways that you can, different levels of tickets. And if you go to the highest level, which is that $100 ticket threshold.
25 tickets, $100, 25 chances to win.
Thank you very much. It's $100 for 25 tickets. If you go there, we're going to include Bella's bracelet for you, DBA bracelet. And then we're also,
but not just that, but wait, there's more.
We have a very few amount, a very small amount.
Show it. If you didn't come to the summit, and you were wondering what these amazing sweaters that GC and I are wearing, I mean, they're nice. I know Lee's wearing his in the chat, he said. I hope you all are wearing yours. But if you didn't come to the summit and you are suffering from extreme FOMO of not having one of these sweet sweaters that everybody's going to wear at next summit, then there's one way to pick them up.
There you go.
It also involves getting a sweet bracelet by Bella, and it involves donating to a great cause. So
there you go. We have 9 sweaters left. Bella has had to work every single night making more bracelets. So she will continue to make more bracelets for you if you donate $100.
But wait, there's more. Tony just gave us some Don't Be Average stickers. We're going to throw some Don't Be Average stickers in there. Look at this.
Just like this is QVC.
It's just like QVC.
But it's for a great cause. So we hope you take advantage of it. So the first 9 people will actually get these sweaters.
Yeah.
We don't have any more. So it's the first 9 that donate $100 or more.
And first come, first serve on sizes.
There's
true. A limited run here, folks.
We have
There's
one medium.
Double XLs.
We have one medium. So if you want a medium, you got to donate now. Just put it in the chat and just say I'm committed for $100. We have 3 larges, and then we have a few double XLs and 1 triple XL.
Nadeem just put it in the chat. He's in for 100. Nadeem's gonna get number 1.
I love that. Nadeem, the reason he's the shot, man.
Lita said that she did love to support. Raj, right along, Raj is in. He says he wants to meet. All right, here we go.
Thank you guys. Thank you guys.
All right, let's go. Best community ever, man. And GC, I think it's time to do what we do here, which is I'm hearing people love to see the name with the face, and the name is famous, made on what, GC?
The roll call, baby.
The MVP kicking us off.
Mr. Lee Bishop.
I've heard of him. We got the Major Santorios from Northern Virginia.
Michael Santorios.
We got our leadoff hitter batting third today.
John Henning.
We missed you, buddy. We got the ringmaster in the house.
Andrew Barnhill.
We got Susan Parker back.
Susan drove in 7 hours overnight just to be there at the summit.
Susan, so good to have seen you. We got the early bird.
Mr. Dean Curry.
We got Christopher Lee from Fernandina.
All right, Chris.
Good to have you. We got the mystery man saying he's still on an NYAI contact high from last weekend.
Kenny Davies.
We got our regulars, Gary and Rosalind Riley from Marietta, California.
We regard you.
Good to have seen them as well. We got the fairy godmother in the house.
Jen Filson.
We got the Raja Fonse.
Fantastic, Reggie.
By the way, Reggie from the Inland Empire. Reggie told me that his name is not pronounced in that French accent. It's Reggie Fonts, but he likes me saying it like that. So I'm just going to lean into Reggie Fonts. Who else we got here? We got the Shaw Man in the house.
Nadeem Shah.
Missed you, Nadeem. We got Steven Chmielewski in the house.
All right, Steven.
We missed you, Misty, and Troy Johnson.
Past guest.
Past stars.
Great to see you, Misty.
From Denver as well. Number nine.
Mm-hmm.
Number 9. 10 D's last C's. We got Right Along Raj, who was in the house saying hello all.
Great to hang out with Raj.
We got the first family of the Not Your Average of a Show, the patriarch and matriarch, Ken and Carolyn Meline.
We salute you.
We missed you this weekend.
We did.
We got Rachel Bum, who officially told me it's not Rochelle. It's Rachel.
Rachel, that's right.
Good
and she started to join the show. She said she saw the show a few months ago, and it's just been here every single show.
Love it. We got Michael Myers in the house.
All right, Michael.
Oh, good to have you, Michael. We got our amigo. Buenas tardes, amigos desde Duval.
Bill Shields.
Bill Shields. We got Big Papa in the house. Love it when he calls him Big Papa.
Pops, how are you, my man?
Co-founder of the co-founder. We got our favorite flat fee fiduciary financial advisor friend,
Kelly Berenbaum.
in the house.
So great to meet you and Kelly and your husband, Matt. It was great to hang out with you guys.
Pamela Myers, who made it all the way from Seattle.
Is she or not? She's just the most bubbly person and just most positive person I've ever met.
Ever. Big fan. Who else? We got Not Your Average Guest checking in with a hello, everybody. If you checked in with the text alert, that means I can't see your name, so you just got to tell me who you are. We got Milady.
Jag Chada. I had a blast hanging out with Jag.
Jag was great. Jag made it to karaoke. It was a good time. Who else we got in here? I know I saw a couple other names that I wanted to call out. Stanley Jocelyn.
Oh, that's right. Stanley met him and his wife. That was wonderful.
Yeah, big time investor, local. I didn't know that he was local. So now that was good stuff. What else we got in here? We got our favorite name to pronounce, Aaron O'Neill.
Into the light.
Made it over here with Big Earn. Good to see Aaron as well. Who else we got in here? Oh, we got the Man of Steel.
Oh, Vincent Barberite.
Vincent Barberite. We got a new nickname, folks. We found out Vincent Barberite has a steel shop over there, family business. Officially the Man of Steel. Great nickname for you, buddy. We got the legend of Charlottesville, Virginia, the man who has a hockey arena named after him.
Roger Voisinette.
Roger Voisinette. Good to have you in the house. Number 1 referral partner.
He's a legend.
Marie Rockoff from Arizona.
Right, Marie.
Yeah, that's right, Marie. Good to have you back as well. Who else? We got a long one today,
oh, man. You guys are awesome.
Everybody, Medj Garcia. Good to have you, Medj. Oh, our friend John Seckinger was here with his wife.
He was hanging out at the summit.
Gave me some Mr. Alapata. I'm gonna call him Mr. Alapata, John Seckinger, here with his wife as well. Gave me some great tips on visiting Guatemala. A man that was dearly missed.
Billy Green.
Billy Green from the concatenated Penasiad Mountains of Colorado. You're really testing me, Billy. I can't. That's really at my wit's end. All right, GC. Let's get going with the show, man.
Yes, sir.
I could relive the summit all day long, but the people come to get some insights. Oh, Richard Wright says 3, 2, 1. All right, Richard Wright. Good to have you in here. All right, man. So yeah, I heard that. I thought that was an interesting question that we've gotten in the past. This idea, we've been talking about the fact that right now is a really good time to buy rental properties because we believe that in the short to medium term, interest rates are going to drop. When interest rates drop, all the demand that's been sitting on the sideline is going to jump in and they're going to buy homes, meaning home price appreciation is baked in for you to get in and you can refinance later. But the nuanced argument is, wait a minute, if people are going to go crazy bonkers bananas buying homes, does that mean that the rental pool is going down? Is there an inverse relationship between rental prices and home prices? What do you say to that, GC?
Well, I think that we are constantly searching for what is going to lead to some part of real estate going down. It's almost like we just assume that happens a lot or every so often. And as we just talked about on last week's show, real estate is not so much a cycle like you might think of other assets being a cycle, where a period of up, and then a period of down. Real estate is more of a recurring pattern of growth. And so the answer to your question, actually, if you go back and look at the data, is that home prices and rents tend to both go up with the rate of inflation. And when one goes up, it does not mean that the other goes down. So I think we have to kind of break this mental fixation that we have on rents going down or home prices crashing or all the talking heads have been saying for years and years and years now. It's been debunked. Hasn't happened, because real estate is based on supply and demand. And the reality is that we have a whole lot of people that are moving to our country and want to be in our country. And we continue to have a whole lot of families and households that are formed. And that is demand for housing. And right now, we are undersupplied for housing. And when you have too little of something and you have a whole lot of people that want it, that in a worst case scenario keeps a high floor for that pricing. And in a best case scenario, that leads to substantial growth. And, that's really what we have seen for home prices and rents up until this point.
Yeah.
That high floor has continued to happen even through 2023 when interest rates rose to almost 8%. So the answer is no. When home prices go up, that does not mean rents go down or vice versa. In fact, the data says otherwise.
I like that you went to what we talked about, I think it was last week or the week before, this idea that real estate is a recurring pattern of growth. I think that within this question of do rents go down when prices go up is that errant kind of like lens that we have around markets that we believe are cyclical. And real estate is a cycle, and they use cycle, but then when we say cycle, everybody thinks by the dip when you say cycle.
Right.
And you add that to the cognitive bias of we just lived through this like one black swan event that happened in 2008. We all still remember it like as if it was yesterday. And it was the one time that prices dropped and there actually was a dip for a short amount of time. But the reality of the matter is that that is such an extraordinary event that even the most, the institutions failed because they would never believe that that would actually happen. And it happened because we reduced regulations and we allowed all this stuff. But we quickly learned that, as long as there is enough regulations, this dip is very, very not likely. It's going to continue to be a recurring pattern of growth, and therefore rents and real estate prices will continue to go up.
Yeah, it was a perfect storm of problems that were created in 2008. And at the core of it, the real estate industry and the lending world was the creation of the Great Recession. Real estate and lending caused the Great Recession. But that's not typically how recessions are caused. And if you can separate that abnormality from the rest of the way the economy has worked in good times and in bad times, what you'll find is that rents generally go up slowly and home prices generally go up slowly. And so if you can have that type of an asset that's that slow growth pattern, the beautiful thing is then you can apply leverage to that. So you get the benefits of slow, consistent growth, not this cycle, not this cyclical part. So you get that slow, consistent growth. You apply leverage, you learn how to use debt to your advantage, and now you're able to get above average returns as well. And that's really what we talk a lot about in the show.
Got it. And not surprising, our good friend of the show, Keith Weinhold, who's been on multiple times, found the similar topic, and decided to dive into it. And, he came up with this chart, which basically shows that we all know that from 2012, 2011, real estate prices have been going up. And here's a chart for rent for single family homes in the United States. It looks eerily similar to that the same chart that we show very, very often about increasing real estate prices, right? So like if we are seeing a chart that looks just like single family home rents in the United States that mirrors the growth of single family home prices, then, his conclusion is that they're actually correlated, not inversely related. We call it data with perspective. Keith calls it history over hunches. And we wanted to talk about that, to discredit that, even though it's a great nuanced question, right? So right now we got a Q&A from Stevie B. Stevie B in the house says, it seems like the property taxes have been increasing at a faster pace than rent appreciation. Won't the increasing tax and insurance rates keep property appreciation limited? Will rents ever catch up to tax rate growth? Is that true?
I'm just trying to go through this in my head. So, rents grew 10% in 2022 overall. And so if your average rent were $1,500 a month, that's $18,000 a year. 10% would be $1,800 of additional rent growth. That would be a steep property tax increase. Could it be possible that your property taxes could have grown more than $1,800? maybe, but that's still a pretty steep property tax increase. So I'm getting into the numbers here. And I'm just curious, is it actually going up more or not? The general response to this is, even if it did, even if your property taxes went up more than what rents did in 2022, you still are winning by a huge margin when you think about all 5 profit centers. Because what I just did in my head there to see if your property taxes were more than taken care of by your net rental income, that's just one profit center, right? If your property taxes went up, home prices have gone up 40 or 50% over the last 3 years. So think about it in the big picture of how is your asset performing. It probably is taking care of the cash negatives from property taxes increase. It's probably taking care of that just through your rents going up. Maybe not all, especially when you're talking about insurance costs, maybe depending on what your property is specifically performing at. It's pretty darn close, just being covered by the rents going up. But then there's home price appreciation that has gone up tremendously. So anybody who has owned properties in the last few years, you have done so well, even though property taxes have gone up and insurance costs have gone up. And have property taxes been rising at a rate that's faster than most 3-year spans? Absolutely, because home prices have risen at a rate that is way more than what you typically have. And not all this is not a coincidence, right? You are in this position of strength because you made the decision to invest in an asset that's a critical need, and that has an undersupply at the moment. So if you have something that people really want and the demand is really, really high, you want to own that thing because you're putting yourself in a position where it's likely to grow. And so bottom line here is, even if it is Stevie B, you are winning by a mile, and it's not a coincidence. And if you want to be like Stevie B or anybody else who's owned homes in the last 3 years, guess what? You still have that opportunity to be in that position of strength right now by putting your money in rental properties.
Yep. And you do that by going with you go to chatwithjwb.com, book a time if you're a new client. If you want to put more in a contract, you, as a existing client, you just reach out to your portfolio manager, or you shoot an email to info@jwbcompanies.com. Interesting note here from Roger Voicenet in the chat says, last week I received a $10 million donation towards the University of Virginia Ice Arena. Project name, Don't Be Average.
What? That's amazing.
That's incredible, man.
Holy cow. Roger, thanks for sharing. That's incredible.
That's really
congratulations.
Cool. Thanks for naming thanks for a great project name, my friend. All right, GC. Speaking of other rental trends and other recurring patterns, Zillow recently published numbers of rent appreciation, and it indicated that the entire state of Florida rent has gone up, including Jacksonville, including all these other markets. Did you get a chance to look at that report?
I did. Well, I looked at the synopsis of the report. And so I was not surprised that rents have gone up. I was not surprised that Zillow is reporting that. You know, the specific data that Zillow reported, I've got some even more granular and better data that I want to share with you there. But overall, it said, listen, rents are going up, but it might not be exactly what you thought as far as how that's going. What they were very quick to point out, which is something I love, is that when we talk about rents, we have single family rents and we have multifamily rents. And those are actually performing quite different. So that entire number of talking about how rents are going up across the state is combining both. But I think it's really cool for us to shed a light on the differences between single family rents and multifamily rents.
Well, we can start with this graphic right here, published by our friend at the Market Distillery, local ex-professor in Jacksonville here that started this data company. And what you want to see here, if you're watching on the podcast, green means good, and yellow and orange and red means bad. And you're seeing 2 maps of Florida. One about single family rent changes year over year. It's all green. And then to the right, there's a multifamily rent change year over year, where it is predominantly yellow, orange, and red, showing that multifamily has actually decreased in Jacksonville and a lot of these other markets, while single family rent changes have gone up year over year in the same markets.
Absolutely. So I've got the data to support this. This is the data that we use. It's coming from John Burns Real Estate Consulting. And just to put it in perspective here, on the single family rent side, if you go back from 1985 all the way to 2022, which is the last data that we have, the average rent increase per year is 3.7% in Jacksonville, Florida. So 3.7% per year is what you get as far as rent increases on average. In 2023, so what the year that just ended, we actually increased our rents 1.6% for single family rents here in Jacksonville, Florida. Now it's a little bit lower than normal, but we're on the heels of 10% rent increases multiple years in a row. So the fact that we've had multiple years of rent increases so substantial, and now we're at 1.6 just continues to give more proof behind the fact that you have a very high floor when it comes to rents and home prices. Because
I think it illustrates this whole like there's no like dip. It's
Right.
just like a recurring pattern of growth, and it might grow faster, it might grow slower, but if on the back heel of 10% increases year over year, the next year is also an increase. It just means if you're waiting to, it's kind of the same thing as buying real estate. If you're waiting to rent until rents go down, you're going to continue waiting for a really, really long time.
And how many talking heads out there were saying, oh, we're going to have rents crash in 2023.
Yeah.
Oh, we're going to have home prices crash in 2023. I'm here to tell you guys, home prices and rents went up in Jacksonville in 2023, which is exactly what we were saying was going to happen back in the day. So single family, 1.6% increases here in Jacksonville, Florida, according to John Burns. In the multifamily side, in 2023, we had rents drop 4.3%. 4.3%. That's a pretty big drop.
It's a pretty big drop.
Okay.
Yeah.
So why is that happening? Why are single family rents continuing to go up, whereas multifamily rents in 2023 actually fell, which is very abnormal?
I would assume it's harder to bring to market single family homes, and there's less of a supply for single family homes in correlation to the demand for single family homes versus the supply of multifamily to the demand for multifamily. Would be my guess.
Well, yes. So, a few years ago, we had a lack of supply for both multifamily and single family. But do you think it's harder to solve the supply problem for multifamily or for single family?
I would say single family.
Absolutely.
You need more space. You need more, like harder to do in an infill lot to build density, things like that.
And just think about the creation of the units. You can build a 300 unit apartment complex much quicker than you can build 300 individual single family homes. And so this insulates you on the single family investment side. There are so many things that I try to show folks. Everybody's very quick to say, I want to go from single family to apartments, or I want to go from this single family to commercial, or you name it. And there is so much built-in insulation from single family homes. This is one of the things we haven't talked about, but there have been so many apartments to come online that are hitting now, and we're hitting in 2023 because they got their funding and they started to go into construction 2 years before when their financing was just absolutely the most incredible terms, right? Low interest rates at that time. So they started to build and come online at that time. Well, now all those units are here. And we're actually starting to see the other side of the supply side. It's temporary, right? Long-term multifamily we see is going to be great in Jacksonville because of the population growth. But what John Burns is reporting is that 4.3% decrease in rent rates in the multifamily sector in Jacksonville in 2023. And actually in 2024, expecting a 1.9% decrease of rent rates in multifamily. Single family, again, 1.6% growth in 2023. Single family for 2024, according to John Burns, is expecting a 2.1% increase on the single family side. We still have that supply problem on the single family side. It's going to be here for a while, and this puts you in a position of strength for owning single family assets.
And we talk about this idea of, well, first of all, I want to ask this question by my friend John Seconder over here. Is duplex and fourplex considered for the stats to be single family or multifamily?
That's a good question. 1 to 4 units is considered single family in most realms. I didn't double check that for Burns data, but you know what? I'll do that.
Okay, cool. I'm glad he asked that because I'm sitting here thinking I just bought this duplex and I'm going to rent out one side of it but I feel like I'm living in a single family dwelling.
Yeah.
Right.
For lending purposes, they usually categorize 1 to 4 units as single family and multifamily above that.
Okay.
But you know what? I'll double check that. Great question, John.
Yeah. Great question, John. So we talk often about this idea of risk mitigation. We talk about how real estate is a risk mitigated asset because it's a hard asset, right? We talk about real estate in a growing market being a more risk mitigation because there's always going to be extra supply, extra demand for like a limited supply.
Mhm.
We talk about real estate, residential real estate in workforce housing being extra mitigated because in workforce housing, there's always a stable demand. And when people hit hard times that are in luxury housing, they recede to workforce housing. So it's insulated. But we haven't really talked about the idea that single family home workforce housing in a growing market, real estate is even more mitigated because when there is a supply problem, it is much easier to bring online 40 multifamily units than it is to bring online 40 single family homes. So it is another layer of why, to me, this asset class of workforce housing, single family home sits in my most risk averse, most I can count on this thing long term bucket when I'm thinking about my retirement plans.
I agree. It's surprising to me that everybody's looking for the next time that it's going to crash
Yeah.
or that rents are going to come down, because that's really where it should sit. And the data proves that. If you look at how much it has grown and how it has grown over the years, over decades, both on the rents and the home prices side. And if you just think about it, how the banks look at it, right? There's a reason banks don't lend on stocks. There's a reason banks lend on real estate, on rental properties. It is one of the most built out lending platforms there is. And it's because it's stable and it's consistent. And if the banks want to lend on it, that should tell you something.
Yeah, that makes sense. John is saying a duplex considered multifamily in the statistical results. Not so sure you're correct, John. I think what Gregg is saying is we are not sure in these statistics whether they're counting duplexes and fourplexes in these statistics, in these predictions for John Burns real estate. And Gregg is going to double check that for you.
I'll get back to you on Thursday.
Yeah, definitely. Okay, so that is an interesting distinction, right? So like multifamily has gone down, multifamily expected to go down in the near future, single family has been going up, expected to continue going up, and that trend happening. So something to think about when you are hearing real estate is crashing, this and that is happening. It's like, no, wait, not so fast. Let's go into the data. Let's separate this stuff, from the emotions and from the headlines and the different things that are happening. And even when you hear, oh, Jacksonville has only appreciated X, you can say, oh, but has it appreciated X in multifamily or single family, right? Like all these, when you get more and more granular, then you get to start to see these not so average opportunities that come to light. And what we continue to show on the show is that single family workforce housing not only has better risk mitigation, but also as high or higher upside than just about all the other options that you got going on.
Yeah.
When you think about it from a long-term perspective.
Well said. Also do want to point out that Jacksonville's rent prices and home prices have appreciated in the top tier of the entire country over the last 4 years. And there are a lot of places out there. Every real estate market is different. There are a lot of places out there where they're not performing as far as rent prices like Jacksonville is today. So if we talk about 1.6% increase, it's hard to find another market that appreciated, 20, 30, 40% for rents.
True.
And is still
It's still
appreciating,
cranking.
right? There are other rental markets out there that are actually having rents go down.
Yeah.
So we got to have that perspective that not only did we grow significantly, but we're still chugging along. We're still seeing positive rent growth expected in 2024 and in 2025 and in 2026 and in 2027, which is the farthest that John Byrne goes out to predict.
And again, for anybody that came on the summit tour, right? Like, not super surprising, right? Like if it's all a factor of supply and demand, it's really hard to beat this idea of all the trends working in your favor, right? Like Southern city with great climate, tax-free environment, super high quality of life, beach access, like wonderful place to live, growing economy, like it just kind of checks all the boxes, right? And still under the median living standard of the United States. So like all those things, which is what brings everybody to like the super high price cities, plus still a deal. So of course we're going to continue to grow in population, and demand for housing is going to continue to go, making it so that it can go through like a giant spike and still keep chugging along even when everything has slowed down.
Well said.
Right?
Yeah.
Cool. Chat with JWB.com if you want to get in on this train. So the last thing that we wanted to talk about, Gregg, sensitive topic, right? Like we are not here to talk about whether this should or should not be happening, but there are a lot of numbers out there that are showing a growing immigrant population, right? I think it's as much as 2 million new immigrants are going to come into the country. I'm trying to find the thing to show here on the screen. Here we go. No, whatever. I'll find it once I just go to share. But, in reality, there's 2 million new Americans are expected to show up here in the United States by 2033, right? You combine that with growth of population through natural births minus deaths, and what it is showing is an increased demand for housing, right? So pair that with the idea that we just hit a low on how many homes have been being built, right? Like, so this is a really interesting graph here that we're looking at. Housing inventory reached an all-time low in January of 2022 and has slowly been rebounding, right? So it's going to take a lot of time to build that all back in. And if we are to take, we don't have a solution for it, right? Like it can all change based on political climates. But let's say that these numbers are true. 2 million new Americans, regular rate of growth. What do you read into these? I mean, people are calling it an immigration crisis, but as far as the perspective of a real estate investor, what are you hearing?
I just hear that we have a lot of demand for housing coming, no matter what happens with immigration or not. I think people sometimes forget that, there's new net births in the country, in new family formations that help to drive housing demand. There's in-migration within the country coming to the state of Florida and coming to Jacksonville, moving in. And then there's immigration coming into our country, of which many folks do come to the state of Florida as well. And so we got a whole lot of people that want what we have here in this beautiful country and that want to have a home to live in this beautiful country. And, against the backdrop of a housing supply crisis, right? A housing supply shortage, when you're talking about this many millions of new net births and immigrants and in-migration into places like Florida, you are in a position of strength if you own the house, if you own the asset, because we don't have enough to support it as it is today. We don't have enough to support the demand as it is today. And we are likely not going to have enough housing to support the demand for the foreseeable future.
Yep. Yep. I mean, that's what I hear too. I hear booming population, right? Means higher rental. I mean, specifically in this sector, right? Like higher rental housing demand, right? Is it going to be in workforce housing? Is it going to be in low income housing? To me, doesn't really make a difference, because if all the low income housing gets taken, then all the workforce housing, will continue to be in demand, right?
Mm-hmm.
So like within this range of population will need to happen. And at the end of the day, people still need places to live with their children and their spouse and maybe their abuela, to go to school, to go to work, to have shelter over their head. And the big draw of America, like America is like synonymous with the single family home, right? Like we are the place that people come to have a yard and space and a picket fence and stuff like that. So people that are coming here are motivated to make that happen for themselves. So they will continue to ask for this asset class. It'll be a continuing supply. I also hear, maybe there is also a increased labor force in the construction trades as well, because we are, getting this like supply of talent as well. And that might help reduce prices for fixing your home, for maintenance, things of that sort, right? Like increase your purchasing power.
Certainly could happen. I mean, a lot of that is in the political crosshairs right there. I know housing construction costs have gone up a lot. I'm a big fan of housing construction costs going down, and I think we all should be, because that will help homes become more affordable for folks if we can decrease or at least slow the rate of increases when it comes to housing construction. How we do that and how immigration plays into that, we'll leave that up to the leaders of our country to figure that out. But I just keep coming back to, where do you want to put your money? Knowing these macro forces, where do you want to put your money? Owning the asset. That's where I want to put my money.
Yeah, yeah. One of the things that you brought up during COVID was, essential needs, right? And when I think about, I like to gamble, I like to take risks, right? Like there is a part of me that likes to bet on like extreme upside with like real risk, but there's a large part of me that says, I work really hard for this money. I really want to make it work for me long term. And I need to have a certain percentage of what I'm putting away be in a very, very safe place. And within the safe confines of that, how can I get the most upside? And this essential need that is continuing to show that it's highly, highly risk mitigated across multiple levels, whether it is this idea of, harder to replace single family home versus multifamily, or whether it is as population grows and the amount of supply, like the amount of people that want this, and like the picture perfect scenario of the American dream is a single family home and people want to live in it, just makes me feel good all over to think that I am making sure that part of my plans are counting on this thing to work for me later on.
There really is a way to do good in this world and to do well financially. And I think that's one of the things that our clients love the most, right? If we think about what the best thing we can do to solve the housing affordability crisis, it is to create more inventory.
True.
When you have more inventory, more density, that allows for home prices to not go up so much, right? You're solving the supply crisis. Every time you buy a JWB home, you're solving the housing affordability crisis.
Yep.
You really are. That's the only way that we can build over 400 homes this year, which directly go to solving the housing affordability crisis. And we sell homes to investors. We sell home to owner occupants as well. And if you look for the number of homes that are sold with a purchase price of $300,000 or less in Jacksonville, JWB sold like 70% of those. I mean, we are the leading provider of housing, of affordable housing here in Jacksonville that requires no city incentive dollars. You're all a part of that. We don't get tax rebates from the city or any incentive dollars to do all of this. You're all a part of that.
Yep.
I can't think of a better way, again, to feel really good about what you're doing while also being able to have an asset that's consistent, provides significant upside, and provides cash flow when you need it in retirement. This is why I've never moved off of how much I love single family rental properties. And I don't understand why everybody's like, all right, I'll do one or two, and then I'm going to go and do something more exciting. This is it, guys. This is this asset that is better.
Yeah. Another reason why we're able to produce 374 different podcasts of different ways that we love this asset class. Cool, man. You're taking me back to the summit and kind of like this whole idea of the impact that we are creating, and the big message for the year for JWB of like creating impact, right? And I'm super pumped. This Thursday coming up, we're going to do a recap of the summit for those of you that weren't there. We've got, actually the chat's blowing up right now because Nadim's like looking at the Himalayas right now. He's tuning in from the foothills of the Himalayas.
No way.
So Nadim didn't get to hang out with us, and Bill didn't get to come, who's looking at a completely different type of mountain. But we're going to do a recap of the summit. We're going to do a recap of the lessons and our takeaways, right? Like what we were hoping that you would take away with the presentations that we gave, that we had some pretty good reviews on, and kind of like our insights of what people have brought to us since. The WhatsApp group is right now, very much alive with like their insights. I'm going to share some of that. If you were there and you want to, share your message yourself, I'm going to reach out to a couple people, see if maybe you want to come on the show and share with us. But if not, Greg and I are just going to go beat by beat, things that we were teaching, things that we heard back on feedback, what you missed, what you didn't. It'll be a great chance to relive it if you're there. It'll be a great chance to find out what you missed if you weren't there. And if you missed out on these puppies right here, I'm talking about my sweater, not the puppies underneath them. If you missed out on these sweaters right here, I'm not sure, Cody, are there still availability to pick one of these up, or is the $100 ticket? Small availability. There might be 2, maybe 3 chances to pick one of these up by donating $100 to the the JWB 50/50 raffle that's going to donate a home to a resident. And
you get a bracelet
you get a
from my
bracelet.
daughter.
And you get a DBA
A
bracelet.
DBA bracelet. Don't be average.
Don't be average. Stevie B's got a question in the chat. Are the statistics similar for townhouses for standalone properties? If not, what are the incremental differences high level?
I don't think Burns breaks it down to that level, but you know what? I will ask all these really great questions, and we'll get back to you on Thursday.
Cool. Yeah, we'll have an update on getting more, what's the word I want to, like, granular with that Burns data as far as like what the line is for multifamily, for Stevie, for John, for me. Because I want to know, because I know how to duplex. I am one of these folks. And yeah, super pumped to go over, relive the summit, man. It's going to be a really, really good experience. 77 folks today, GC.
Love that, man.
You know, after 125 of you spent 2 full days, you're not sick of us. Means a lot. It means a lot. I love the reconnection here in the chat. Everybody kind of like sharing ideas. The fact that everybody's saying, so good to meet you. This community is what it's all about, right? Like you guys making time week in, week out to show up on a Tuesday and Thursday, middle of your workday. We never take that for granted. I can tell you that sharing these 2 days with you has been like, my heart is full for a long time. You all, a bunch of you said really, really nice things to my parents, which really, really means a lot to me. My dad went from like, what does my son do, to he is off trying to sell rental properties to my cousin and his cousin and his cousin's nurse and all these different things. So it's been a really, really incredible transformation. And I thank you from the bottom of my heart for being part of this community. GC.
You know, one of the things that I was just looking at when we were welcoming everybody in on Friday is the amount of people that walked through our doors, saw a member of the community, and went and gave a big bear hug.
Yeah.
And these are folks that had never met each other in person. And that's just, if I could just encapsulate the beauty of what we have built together over the last 4 years in this community, that's what I saw, right? It wasn't a handshake. It was a lot of hugs and smiles and just people rooting for each other. And so, you know, our community is magical. It's special. And I wanted to say thank you for that. And I'll echo just the family effect. You know, I had my dad, of course, Big Papa was there. I had my business partner's mom, Jane Terracano, was there. She's like a second mom to me. I had my mother and father-in-law there. They had never been to one of my events. I had my wife and my 2 kids there with me. And the ability to just kind of share that, especially with my kids, and to see them thrive and be excited, 11 years old and 9 years old, thrive and be excited and be put sort of on a pedestal by all of you as just saying, you guys are not your average investors. And, you know, they were made to feel very, very special. It was a wonderful gift that you all gave me and a very special dad moment. So thank you guys. We really, really appreciate it.
Amen to that, man. Little teaser. My favorite moment from the summit was part of Bella's presentation. It wasn't the fact that she gave a presentation. It's something within it. I'm going to share that on Thursday. But up until then, GC, any piece of advice?
Don't be average.
See you all Thursday.
See ya.